Shutdowns. Well, we've got another management that's joining in, Mr. Jayant Acharya, the joint MD and CEO at JSW Steel. Hi, Mr. Acharya. Good morning. Thanks a lot for joining in. Well, let's first get out that steel demand factor out of the way. There are various sectors that have been a slowdown, but in steel, it appears things are still solid amidst the global uncertainty.
Yeah, so the steel demand, if you've seen in India, the last quarter grew by about 7.9%. It has been strong, considering the fact that the quarter YOY grew by 15%. So the base was seasonally higher. So 7.9% is good. The capex by the central government for April and May numbers are also positive. I think we are on track to achieve this 11.2 trillion of capex, which was announced. From the domestic side, so therefore we see stable economic growth. We see good steel demand in India. As far as the global challenges are concerned, I think we have seen quite a few in the last few months. The uncertainties have not fully settled down, geopolitically as well as on the tariff side. So we see still a resilient economy in spite of all this. And World Bank has still maintained the growth at 2.9%, slightly lower than the last estimate, but still at 2.9%, which is reasonably good.
Well, the problem is the gray area with regard to China. China, well, the production has come down, but exports continue to remain elevated. That's what's weighing on prices. How do you see this panning out going ahead? Will things improve with regard to the Chinese factor from here on?
Yeah, so just to go to the Chinese production side first. So China production for the first half of this year has moderated by about 3%. The domestic growth has also moderated by close to 6%. And their exports have been elevated, so went up by 17%. So that's the area of concern which we see. On the price side, I think China has improved over the last few weeks. We see that as a positive. The inventory in the China's monitored areas or monitored markets are down by 4 million, from 14 million to 10 million, which is again a positive. So given the fact that 30 million tons of production cuts are expected, or let's say production moderation is expected this year, I think going into the second half of this year, maybe we will see a better moderation on the export side as well. Coming to India, yes, I think the safeguard has been very timely, and it has certainly been of great help to the Indian steel industry at large. As you know, the global challenges, as I mentioned, have been quite high. The tariff uncertainties have also caused trade flows to get diverted. And India is it's a high growth market and is open to barriers. So therefore, this safeguard was very timely. We do expect that the government will be looking into the final safeguards, which are due in the next few months. And we'll take necessary steps to see that dumping of steel in India does not happen.
Absolutely, and the government has come in with some measures, and that seems to be helping the industry. Mr. Acharya, morning. Thanks for joining in. I also want to talk about the benefits that you're getting because of a drop in some of the input prices, for instance, in coal costs. What is your expectation for the second quarter, for the rest of this year? I mean, do you expect a further decline?
So on the coking coal side, last quarter, as we had guided between $10 to $15, we have seen a drop of about $14 in line with our guidance. Going forward into quarter two, we expect a lower drop. As you said, the prices are stabilizing. So maybe between $0 to $5, say up to $5 is something which we see a moderation possible on coking coal side.
Oh, okay. So that's good news. I mean, there's a safeguard duty on one hand, some of your input costs are coming down. So what could this mean in terms of your standalone EBITDA per ton?
So on the Indian operations side, rather than the standalone, I would look at the Indian operations. Indian operations, the EBITDA stood at 7,496 crores, which was up sequentially by 16%. We were helped, or we benefited by the movement in prices, which went up. Also on the coking coal cost side, we gained from the drop in coking coal. However, we had certain shutdowns. We had a blast furnace shutdown in Dolvi for a plant maintenance, and the same in BPSL. which increased our specific consumption and had some cost. So therefore, what you see here is net of that. These shutdowns expenses are not likely to be continuing. So therefore, that would be a positive going into quarter two. The other abnormal movement which we had was the foreign exchange movement. We actually had a forex loss of 343 crores, which is a mark-to-market on euro appreciation. Euro appreciated sharply between end of March to end of June, and that's had an impact. On the consolidated EBITDA, as you said rightly, the overseas operations have done well. US operations from a negative 3 million swung to a positive 20 million. Europe from a marginal negative swung to a positive 1.3 million euros. So therefore, the overseas operations contributed sequentially, to the EBITDA. And therefore, you see the consolidated EBITDA at about 7,576 crores, which went up again by 19% sequentially.
Well, indeed, US has really turned around in this quarter, and maybe things could look up from here on as well. Got that. But Mr. Acharya, what is the outlook on debt from here on?
So on the debt side, 79,850 crores, we are about 3,200, 300 crores higher than last quarter exit. Primarily the build-up of some of the inventories in our new operations at JVML and certain other assets where we had to build up the inventory. If you recall, the inventories were sharply reduced in the previous 2 quarters. So we reduced our inventories in excess of 300,000 tons. We had to rebuild some of it because of new operations and for better servicing. The exports was also lower. If you see quarter on quarter, the exports also went down, primarily because of the international market situation. So that also resulted in a bit of an built-up in inventory. And that is the reason why you see debt going up. So the working capital will get unlocked as we go into progressively into the coming quarters of the year. So that looks fine. The ratios are very good. I think what you should watch is that 3.34, which was the net debt to EBITDA, has now improved to 3.2. The net debt to equity remains flattish at about 0.95. So from the ratio side, we are very prudent, and we continue to look at the ratios and see that we are aligned to a prudent ratio management.
But what about the fundraising plans? Any equity raising plans in the near term?
Nothing as such. Nothing so far.
Okay, all right. So no fundraising immediately on the equity side. Got that. Finally, before we let you go, Mr. Acharya, I have to ask you about this, right? Bhushan Power and Steel, we know the matter is sub judice. It's in the courts, and you filed that review petition. But how are you thinking about it? I mean, just in case you don't get a favorable review, I mean, what can you tell shareholders right now on this?
Yes. So, this operations, as you're aware, in BPSL, we have turned around after JSW Steel has come in. The operations from a loss-making entity to increase in production, increase in capacity, and to making profits. That has been the contribution which JSW Steel has brought to BPSL. Last quarter also is reflective of that. So we had a EBITDA of about 760 crores, which went up substantially YOY and QOQ both. As far as the review petition is concerned, we have filed a review petition on 26th of the last month. And, we believe we have strong grounds to pursue the review petition. The COC and the resolution professional, the RP, have also filed their separate review petitions on the subject. So the court has opened. I think we will await the listing in front of the bench and then await the outcomes. But we believe we have strong grounds to pursue this case.
Thanks a lot for that, Mr. Acharya. Wishing you all the best, and we look forward to chatting up with you. By the way, that initial dip that we saw in the Nifty has got bought into. Big recovery from the lows, 80 points recovery from the day's low. Let's see whether or not this can sustain. For the time being, though, slip into that break, come back. The management of Canfin Homes is waiting for us on the other side.